Here in Nigeria, earnings releases for the second quarter and the first half of 2022 are set to roll in later this month. A few of the big banking names on Broad Street will be among the earnings curtain raiser for the period under review. As expected in other markets, such as Wall Street, starting today as well. We saw JP Morgan and we saw Morgan Stanley on Wall Street. So here in Nigeria, joining me to chat on the coming season of bank earnings in Nigeria, Joshua Odebisi, Sub-Saharan African banking analyst with Vetiva Capital Management. Joshua, you're very welcome. Good to have you on the show. Good evening. So, what can we expect with respect to half H2 and the second quarter of the year for the banking sector?
All right, well, first looking at the second quarter, I think it's a bit split into two. So we have the pre-MPC meeting and the post-MPC. So pre-MPC, things were still pretty much going the same way they had been going in Q1. We'd seen some slight improvements, but costs were still generally higher. A bit of an improvement in profitability, but overall, things were just chugging along fine. Then the NPR came along, and we saw it went up to 13%. Now, I think that had an effect of basically increasing the bank's potential earnings with regards to interest income across the fixed income market, because as you can imagine, that trickled into the fixed income market with bonds and T-bills, their yields going up. Yeah. And so that will positively affect the bank's earnings because you see more activity in the fixed income market, which will lead to greater volumes, which will lead to more earnings for the banks. And I think that's one of the bigger impacts. So that's what you can expect in the second quarter. So I think that it will still be a follow-on from the Q1, a slight improvement in profitability for the banks year on year, but overall, we're still not seeing the great strides that we saw maybe in 2020.
Interesting. And if I was to ask you about the key drivers for the banks, I guess the NPR is going to be one of the drivers. Any other drivers to look at for these upcoming earnings?
Well, generally, I think we can start with the consumer loans and consumer lending, or rather just loans and advances to customers across the industry. Right? I think that it's been a little bit slow, and I think that that's actually going to continue. So we're not anticipating a large jump or a large bump in loans and advances. So I think that that's part of the reasons why we're not even seeing such great increases from most of the banks. I think you still see that from the likes of Access and maybe to a lesser extent the Zenith Bank. But the other ones we're seeing a bit more of a predictable pattern simply because of the fact that the general economy, although it has recovered or is recovering, is not going at the pace that you would like to see that kind of improvements in earnings for the banks.
So just to follow up on that, if your loans and advances are not that robust, then is that going to have any impact on net interest income for the banks?
Yeah, absolutely. Because at the same time, you have to also remember the fact that these banks have to pay interest expense to the customers for their deposits. And those deposits are probably going to go up because of the fact that the NPR has gone up. So the cost of that money, the cost of funds for the banks will increase. And so that will have a negative impact on your net interest income and their net interest margins, which we had already seen somewhat in Q1. The interest expense has been going up. It started in 2021, I think in the second half of 2021, and it has carried on into this year. And I think that will get more, it will accelerate just because of the fact that the NPR has gone up.
Interesting. What about external risk to the banking sector? What do you think? Any of those, any risks that could impact the earnings for the banks?
Well, I mean, there are a few. We have to remember the fact that in terms of loan book, the banks are quite heavily exposed to the oil and gas sector. Right? Yeah. Now, as you can imagine where I'm going with this, the fact that oil production has not been great. We're 1 million barrels down from our historic highs of 2014. We're doing at about 1.2, 1.3 million barrels a day. So obviously, any exposures that the banks have in the upstream sector may come under some pressure. But from what we've seen so far, NPLs have been pretty stable. They deteriorated by about 30 basis points in Q1. We might expect some more deteriorations in Q2, Q3, and Q4, but overall, it's still not too worrisome at the moment. However, it could be a lot better if the general million barrels per day was up to 2 million. I think we'd be, all smiling.
So it's the main exposure, the main risk is going to be is the exposure to the oil and gas sector. As far as the second half of the year, looking ahead, if there's anything that could bump the earnings up for the banks, what do you think it would be? Or do you think, I think earlier you said it was the same trajectory they might follow through from the first quarter due to the NPR bumping up. But do you see anything else that could, push up earnings for the banks?
Unfortunately, I only see downsides. Just because of the fact that the economy isn't growing at a pace that, would generate significant gains for the banks across interest income and non-interest revenue. So whether you're talking fees and commissions, that's very much down to the level of activity. The more transactions the banks see on a day-to-day, the more their earnings. Now, if transactions slow down because the economy isn't moving as quickly as before, then that will have a negative impact. Same way we already talked about loans and advances and the fixed income market. The fixed income market, I think, is the biggest upside, right? Okay. Now, if in the coming MBC meeting, the committee decides to raise the rates further, that will have a trickle effect on the fixed income market. It will negatively affect the interest expense as well, but the fact that you'll probably see higher yields in the fixed income market will lead to more activity there, which will lead to increased fees and transactions.
Okay, you've already mentioned MPC, just a couple minutes to go. What do you think? Because look, we just saw inflation in Ghana. There's a debate as to whether or not the Bank of Ghana is going to raise rates again. Or what do you think? And if inflation was the reason why the NPR went up last time, I'm expecting another inflation increase in Nigeria. So what do you think? What's going to happen?
Well, so I think historically what we've seen is that the committee has been very reluctant to follow up one hike with another, simply because of the fact that they come out and say that the first hike has not had enough time to, marinate in the economy and cause things to slow down. I don't think that we should take that view, simply because the US Fed almost on a monthly basis reviews the economy and will hike or cut rates as they see fit. Yeah. So I think that there should be a more proactive stance towards it, but unfortunately that's not what we have, and I don't think they're going to be too quick to raise rates at this next meeting. Oh,
okay. So in that case, that means then if the rates stay where they are, then what you said earlier is that as far as the follow through from the last rate hike, or 13%, that's what the banks will be riding on looking ahead.
Yeah, absolutely. At least till the end of the year. Maybe if things get significantly worse, if the rate of inflation goes up to 20%, then we can start to talk about, more aggressive rate hikes. Then we can now come and revise our expectations on what we see for earnings.
Joshua Odebisi, West Africa, Sub-Saharan Africa banking analyst, Vetiva Capital Management. It's always a pleasure having you. Thank you so much for joining us.